company, we have 0% vacancy,
Wow.
100% occupancy, and 100% positive collection on rent. Because
Wow.
how good is to have a high rent if you can't collect it, right?
Exactly.
So in our property management company, we've been very blessed. We have 30 to 40 applicants per house. Every house that we put on the market, I mean, we can really pick and choose who we want to leave.
Are you tired of trying to keep ahead in the rat race, only to have so much of your hard-earned money going to the tax collector? Equity doesn't pay the bills. Retirement savings don't pay you now, and there are only 24 hours in a day to work. The only solution is passive income that pays you 24/7 now, not 40 years from now. From vetted investment opportunities to tax saving strategies. Let John guide you through all the confusion and take control of your financial life in pursuit of financial freedom. So sit back, relax, and welcome to the Wealth and Freedom Nexus.
Hello, and welcome back to another episode of the WFN podcast. As always, be sure to follow me on Twitter, Instagram, and YouTube with the handle W Freedom Nexus, so you can catch up with all my articles and content that I am posting. Still gearing up for a lot of content to drop in 2023. Plan to be doing posts and tweets, if you will, daily, if not multiple times a day. Of course, this podcast that will drop every single Wednesday has been since November 3rd of 2022, and hope to drop between 2 and 5 videos a week. Everything from second citizenships, residencies, a lot of stock market strategies that you probably haven't heard of, like with option trades. I've been working for quite a few weeks to really simplify options trading, so to speak, because I think it's a little confusing for a lot of people. It really doesn't have to be. And when it comes to options, there actually is a lot of very low risk option trades out there. So if you haven't subscribed yet, be sure to go to youtube.com/WFreedomNexus. Just a few teasers on some videos and contents that will be dropping in 2023. Now, as I'm recording this, Hurricane Ian hit the coast of Florida a little over a month ago. I'm sure all of us have seen the destruction on TV. And or on our social media feeds. The latest report I saw was number of confirmed dead is currently at 122. I'm sure that's going to adjust, somewhat as they go through all the buildings and damage that has occurred in the areas. And, speaking of damage, obviously billions upon billions of damage has occurred. The insurance companies are going to be quite busy for some time. Fort Myers, Cape Coral, and Sanibel were just some of the areas that were hit the hardest among Florida there. However, as unfortunate, and obviously, any death is unfortunate. No one likes to see the damage occurred from Mother Nature's wrath, whether it's hurricanes, tornadoes, etc. There were many areas of Florida that were not impacted or not impacted nearly as much, not as much as what we saw in the media. Two friends that I talked to that live near the Orlando area, they both kept power during the whole time. Just had a lot of rain and wind. Obviously, they were prepared, in case things got worse, but relatively unscathed. Weren't adversely impacted by Hurricane Ian. Now, for this episode today, my returning guest, Wagner in Alaska, actually emailed me back after I inquired with him just to see how he was doing. He said they were safe and their properties did not incur any damage. So that I was obviously glad to hear about. And then later, he had actually sent an email to his subscriber list saying that none of their properties they had built or managed suffered significant damage. So, there might be some, I don't know, holes in siding or maybe a broken window or tiles missing or something, but nothing, major, certainly not catastrophic loss like we saw in the media. Again, this company that my returning guest manages and has founded is a real estate turnkey company. They only work with investors and they only build in Central Florida. They obviously, since these are new builds, these are pretty much up to date with the new building standards. They use only block construction that is actually up to Miami code, which obviously you probably heard Miami gets, storms, each and every year just because they're on the southern coast of the state. And with that block construction that is up to Miami code, not necessarily, Central Florida code, that is proven to withstand hurricane damage. They also take into account, the topography of the land, where they build. Flood zones obviously are taken into account, and they absolutely do not build in flood zones, and they stay pretty much in Central Florida, away from the coast, which obviously, tends to get the most damage from hurricanes. So without further ado, you might have guessed already, this is Wagner Nolasco, that you can follow him on Instagram at Wagner Nolasco .official. That's his Instagram handle. And if you've been a longtime fan of the show, he was actually one of my first podcast guests way back on episode number 2, talking about the boom in Florida. So this is kind of a continuing of that talk track as far as how much the Florida market has changed, expanded, appreciated since he first appeared on the podcast. Speaking of Instagram, was looking at his recent post. Let's see, on October 5th, he posted, Hurricane Ian is the 5th strongest storm to hit the U.S. mainland in recorded history, with losses in Florida estimated at between $47 billion and $256 billion. Ian is the most expensive storm to hit Florida since Hurricane Andrew in 1992, which caused $27 billion in damage. Nearly 900,000 Florida homes were exposed to wind, storm surge, and flooding from Hurricane Ian, which knocked out power to 2.7 million homes and killed 54 people in Florida as of 10/3/22. All this damage in just 20 hours. We were lucky Ocala and Palm Bay weren't in the path of Tropical Storm Ian. The hurricane destroyed entire Gulf Coast neighborhoods, and the tropical storm dumped enormous quantities of rain that caused flooding across the state that communities are still dealing with today, 4 days after the storm left our state. Hurricane season ends November 30th. Let's hope we never see another storm like Ian. And then he also has a link to the Bigger Pockets forum, which I'll also include in the show notes for my podcast as well. So, if you're like me, maybe, for years you were a little leery of investing in Florida. I think a lot of us, we hear Florida, we just automatically equate to hurricanes. And that was kind of my thinking for many years. Actually, not many people know this, or not a lot of my listeners know this. I was actually born in Florida, and here I am in Southwest Minnesota. Interesting story how that all came about. But, when it comes to, Florida, weather, hurricanes, tropical storms, while we can't prevent the hurricanes, we still can do due diligence as investors and make sure where we're putting our money at is going to be safe and as well protected as possibly can. Like I said, we certainly can't, prevent hurricanes, but I think we can, maybe be a little strategic as to where we invest. Now, for years, coastal markets like Tampa and Jacksonville have been talked up in forums and podcasts and videos, and there are actually turnkey providers in each of those. Personally, I've never been a fan of Tampa for investing. Again, just the proximity. And even before Hurricane Ian hit, I just wasn't a huge fan of that area and just felt that there was too much risk for investing in that area and really wanted to focus on Central Florida. Still may check out Jacksonville, might have a turnkey provider that is solely dedicated and works only in Jacksonville, Florida. But right now, my main priority is Central Florida, new builds to mitigate risk as much as I can. Now, ideally, my plan is to buy a new build fourplex, max out one of the golden tickets that Chaley Ridge of Ridge Lending Group mentioned back in episode 20 and then further expanded into episode 22. plan to use one of those golden tickets for the fourplex. Have 3 units as long-term rentals, and then 1 as a short-term rental for Airbnbs, and then also for us to stay when we're visiting Florida. My wife and I are big Disney fans. We actually took our son Ronald to Disney World back in May of this year. Since it was free, we figured why not, and we wanted to go there for the 50th anniversary. So that definitely was a nice little vacation. Kind of with that, in case you're wondering, it's like, well, gee, John, where in the world are you going to get the money for this new build fourplex, especially with real estate values just going up in the last couple of years, and especially mortgage rates going up. You can actually check out episode 55 that aired on November 2nd of 2022. Shared how I'm actually planning to redeploy some equity in my existing properties, redeploy that elsewhere. And yes, while I, unfortunately do think the days of 2.5 to 4.5% mortgages are, long gone, I can still accomplish this comfortably at 7% interest rates, which is at the time of this recording, kind of where the rates are trending now. And, just for a long-term perspective, that is the 40-year historical average for mortgage interest rates here in the United States. So, we've been a little, shall we say, spoiled with low interest rates for the last 2-3 years, and they've kind of dropped precipitously since the Great Recession. But even at 7% or lower, I still think is a great deal. And as long as the numbers numbers work and numbers make sense, and as long as you can cash flow, I figure might as well invest. So with that, here's my interview with returning guest Wagner Nolasco, Build to Rent Direct. But first, a quick word from our show sponsors this week, ECI Development. Have you ever wanted to invest like the wealthy and how the 1% do, but think it's out of reach for you? Do you desire a more abundant lifestyle, but think you can't afford it? If so, check out ECI Development. With over 20 years of international real estate experience, Mike Cobb and his team can help you truly diversify your portfolio and lifestyle. How about benefiting from a generational investment that can 10x your wealth or more with a teak hardwood parcel in Panama or Nicaragua? Maybe it'll even lead to residency options in the future. Perhaps you'd be interested in a beachfront condo for under $250,000, enjoying the beautiful sunsets off the Pacific Ocean. Maybe an eco-friendly tiny home for around $100,000. ECI's team can even help you get financing for these investments. To learn more, check out the show notes or go to wealthandfreedomnexus.com/ECI. Hey, Wagner, thanks for coming back on the show.
Thank you, John. It's been almost a year since
I know.
I was here.
Yeah, time flies, and I gotta. Actually, at the time of this recording, my son turns 1, and it's kind of hard to believe how fast a year can fly by.
I know, it's funny because actually we're recording this video today in this podcast, and my daughter actually is turning 9 today as well. So
okay,
fantastic.
well,
And, we share the same birthday.
Yeah, congrats all around. Just 8 years difference. So.
Yes. Thank you so much for having me. Good morning, everybody, for all the listeners from John and W Freedom Nexus here. So thanks for having me back.
Yeah, thanks for coming back on. I'm glad we could reconnect. Now, Wagner, I was kind of looking back. Obviously, you came on actually on the second episode of the Wealth and Freedom Nexus podcast. This was back in November of 2022. Now, I don't know, let's just say hypothetically, one of my listeners, and maybe this actually did happen, but let's just say hypothetically, one of my listeners, they listened back in November 2022. They said, hey, this sounds great. They call up Build to Rent Direct, talk to Wagner, talk to his team, and let's just say buy a average single family home, has a tenant in it. Fast forward from 2021 to 2022 here, what would that hypothetical investor, what would they have seen as far as price appreciation as well as rent appreciation in the last 12 months?
Wow, that's a great question. Let's just jump right into it. So if you can probably picture some of the houses that we were selling, I'm going to start 2 years ago before we record the podcast, and I'm going to go back to Ocala, Florida.
Okay.
So Ocala, Florida, we were selling for $139,900 for a 3-bedroom, 2-bathroom house,
Wow.
2-car garage. I just closed in July of this year, 5 homes exactly the same. And I ended up paying, because, it'd be pretty much the same price as you do, unless we're building them themselves, but we work with several builders. I paid $165,000 Today, this house is being sold for investors. We don't have any more for 225, but the
Wow.
appraisal on those homes came in at 284. So if you purchased a house last year, you probably paid between 165 and 198. Today is appraising for 284. So you probably made over $100,000 in
Wow.
less than a year, which is probably about 65% only on appreciation. So because you bought um, a product that was unbuilt, right? So it was pre-construction. So you
Hmm.
had to wait for the time of construction. And after the market has been absolutely insane, and
Hmm.
as you know, John, real estate is local, and the state of Florida is doing extremely well. So we're very lucky to be here, at the
Yep.
right place at the right time.
So yeah, I agree. And obviously right there, I mean, I can't do the math on my head, but let's just even say 50% return on appreciation within a year or two. And as our mutual friend Keith Weinhold has always said, that's just one of five ways real estate pays you once you factor in cash flow and the tax benefits, amortization, and inflation hedging. Kind of in conjunction with that appreciation, maybe we can just do ballpark numbers here. Say that home a year ago or 2 years ago, I don't know what the average rents were then, but how much of a year over year increase have you seen in typical rents of your properties?
So I'm going to talk about appreciation. Usually, the state of Florida will give you between 7 and 8% a year. This is historically what the state will give you, right? Our
Okay.
properties are giving you way more than that, just because you're buying directly from the builder or from the developer or from one of the builders that we actually represent, and you usually have the savings. So instead of making the full retail price, the fair market value on the property, because we are investors as well, we understand that we only buy properties that have built-in equity. So you're ready
Okay.
to buy houses at that time when you sign the contract with the equity, plus the appreciation you're going to obtain that year. Now, rents are really amazing. We also own a property management company. We're the only fully integrated, real estate company for investors in the state of Florida, and
Okay.
we have seen a 22% increase on rents.
Wow.
So yeah, 2022 has been a great year. Just to let you know, actually, the rents that we were getting about 2 years ago for $1,450 a month for a 3-2 in Ocala are now $1,850. So I
Okay.
just rented my 5 homes that I closed in July, and I got one house that I received 100% of 1 year rents up front. Uh,
Wow.
uh, Absolutely amazing. I'm very happy about that. But yeah, the average on the rents right now are 1850. So we had a $400 to $450 price increase, and that's actually over 30%. But the state of Florida is averaging a 22% increase in rents for the year 2020.
Okay. So yeah, kind of ironically, 22% for 2022, but 22% increase is definitely good for investors' years, especially when you lock in a 30-year fixed interest or mortgage rate on that property. So your mortgage payment stays the same, but actually after 1 year, then you're got a 22% increase in the cash flow coming in. So
Yeah, and let's just say the 2022 is not over yet. So we
oh
don't
yeah,
plan to
exactly.
be.
We'll see what happens come towards the
So
end of 2023.
yeah,
So
I don't think it's going to be a tie on the 22% to 2022 before the end of the year.
yeah, so
Another very important information just to add on this, John, if I may,
sure.
we actually have in our property management company, we have 0% vacancy,
Wow.
100% occupancy, and 100% positive collection on rent. Because
Wow.
how good is to have a high rent if you can't collect it, right? So
Exactly.
in our property management company, we've been very blessed. We have 30 to 40 applicants per house. Every house that we put on the market, I mean, we can really pick and choose who do we
Sure.
want to lease. So
Yeah.
that has been a great time in the market for all of us, and we're very blessed to be here in this great state of Florida.
Yep, no, I agree. And yeah, Florida's kind of a special place for me. Ironically, I was actually born in Florida, although now I'm in Minnesota. Go figure. So now, kind of going off on the, maybe the, I don't want to say bad or ugly side of real estate. We talked about rent appreciation. We've talked about the appreciation in the real estate values. Now, I myself, I have seen a lot of my properties, the property insurance has gone up five all the way up to 20% in the last year. So obviously, as an investor, as a business owner, I have to make sure that the rents compensate for that. As far as I think of Florida, right, wrong, or indifferent, we think of hurricanes, high winds, rain, etc., possibly flooding. How has the property insurance been for the area for the investors? And I know you yourself are an investor as well.
So great question. Let me break this answer into many compartments here. So
Okay.
let's just say the flood. Flooding, we don't build in a flood zone. So FEMA
Okay.
has established one of the best flood zones to be flood zone X. That's what we built in. And the reason
Okay.
why we do that is because we don't want to deal with the flood. It is very, it's cheaper for us to buy a lot in a flood zone, but we just don't play with that because it's, the cost of repairs and by having flood is absolutely
Mhm.
crazy. The second answer is this. Usually our insurance, because I own an insurance company as well, it's
Okay.
integrated into our business.
Wow.
And because you're buying a brand new construction property, concrete block, high impact glass, the way we build actually saves a lot of money because we build up to code. So when you buy a new
Okay.
construction property, you will be paying 20 to 30% of the total insurance premium that you would on an older house. I'll give you an example. I closed on 5 homes in July right now, and I paid $401 per year. Per
Had to get that
year
one
on my
dollar in at the end,
premium.
huh?
That's probably a little bit more of the profit. But the sad thing is this: if you bought an existing house that was 2 3 years old,
Okay.
you'll probably be paying between 1650 and $1,700 a year.
Wow.
And the reason why it's simple, it's because you're not up to code. So, not only you're not up to code, you're going to pay a higher premium. Also, the insurance companies are going to request a wind mitigation report as
Okay.
well as a 4-point inspection. So you're going to have to spend some money to get your insurance approved. So insurance is a serious business in Florida. It's not easy. It's not easy to qualify. It's not easy to issue the policy. But if you are up to code and you build new homes, you have that advantage. So my advice
Okay.
to everybody is do not buy an old home because you may not be able to insure.
Yeah.
Just check everything before you actually sign the contract and pull the trigger.
Yeah, I actually ran into that myself a couple years ago here in Minnesota, and I did know that there are still homes that had knob and tube wiring, and if there is that present, more than likely an insurance company won't insure it because it's quite a fire hazard.
You're absolutely correct. Not even talking about some of the panels, right? The electrical panels are old and they won't
Hmm.
insurance. So for you to rewire a whole house, including the panel and the rewiring, it's extremely expensive and may not be worth. So sometimes you may see some deals out there. Just be careful. Do
Yep.
your due diligence. Hire a licensed state inspector to do your inspection for you before you pull the trigger.
Okay.
Measure twice, cut once, kind
Yep.
of thing. So do your due diligence because there's a lot of ugly, surprises up there. And
Exactly.
as you know, John, I mean, capital expenditure can really make it or break your deal. So if you
Yep.
buy an old home and you're making like $15,000 in positive cash flow that year, but if your AC goes down
Yep.
and then, you just spend the whole money to replace that and then you make
Exactly.
zero.
This show is brought to you today by Lightbulb Podcasting. Are you a busy professional that needs to get more time back in their schedule? If you are a podcaster like me, you have enough on your plate. Why not outsource your podcast production? From editing, show notes, keywords, scheduling, volume balancing, and editing, and creating audiograms, podcast production is another job in and of itself. That's why I use Lightbulb Podcasting. Get phenomenal support at an affordable price while you concentrate on growing your brand. Go to www.lightbulbpodcasting.com today to schedule an introductory call. Put your content in the spotlight.
So just be careful. Old
Yep.
homes have a lot of surprises,
Yeah,
good and bad.
makes sense. So now in the final piece, Wagner, I'm just thinking, as a real estate investor, obviously we want to make sure they are cash flow covers not only the mortgage payment, the property insurance, like we just talked about, but then there's also the property taxes. Now, Florida, I know, does not have an income tax, as does, I'll just say Texas, for instance. Now, Texas, right, wrong, or indifferent, tends to be fairly high. 2 to 3% of the appraised value is usually what the uh, property taxes come to. What is it like as far as how much property taxes are in Florida? And then since this is a new build or people are buying new builds from you, are there any benefits or deductions, shall we say, on a new build versus an existing home for new properties?
So yes, the answer is yes. There is
Okay.
advantages, and absolutely, a lot of people are not going to tell you the truth. So be careful when you choose a provider because usually they're going to give you the property taxes based on the first year, and the
Ah,
first year is always lower because that actually is accounting for undeveloped land. So
okay.
when you see a very inexpensive property taxes on year one, be
Hmm.
careful with that. Make sure that you allocate what the property taxes are going to be on year two for your properties, right?
Yeah.
So, but the Florida market is very easy. I mean, we don't have state income tax. We have very little taxes here. But
Okay.
property taxes are about 1 to 1.5%, depending on the county.
Okay.
And those are actually assessed value taxes, meaning it's not fair market value. So even if you pay $200,000, just an example for a house, your
Okay.
property taxes are probably going to be based upon 60 to 70% of the purchase price. So it's
Okay.
not going to be a fair market value. Also, your property does not have to get reappraised or readjusted every year. It will adjust it slowly, but it's what by the index that the county believes your property to be worth it. So
Oh, okay.
your property taxes are on the assessed value, always lower than the fair market value. And property taxes has not been a problem in Florida, John, like Texas, that I know it's a great market, right on the Sun Belt, very hot, but your property taxes can really and will be adjusted yearly, which can actually really put a dump and a stop into your positive cash flow rate.
Makes sense. Or anyone listening in New Jersey, I had a guest on my podcast not too long ago. I don't remember the home value, but I remember the property taxes were like $15,000 a year up in New Jersey. So yeah, every state's a little bit different. So now, Wagner, and I'll include this in the show notes, but you were recently on a podcast with our mutual friend Keith Weinhold on the Get Rich Education podcast. Now, obviously, you're a builder. You have about 3,000 properties in various stages of construction, but you had mentioned that. I'm just throwing out numbers here. If an investor purchases a home for, say, $250,000, that's what they buy it for. That same home might be worth between 250 and $300,000, giving the investor an immediate 50,000 or less, you know, let's just say 10 to $50,000 equity from day one. Just high level, how is that possible, or how are you able to offer that to investors? Are you just taking a hit on every one you sell?
That's a great question. Well, we're not taking a hit. I mean, we're going to be
Okay.
very transparent here, right? We make money on a per house basis, but what we do is we make less.
Okay.
you know, if you go to a national builder and you purchase a house, what he's going to try to do is he's going to try to lock the price in as closely to the delivery date of that house so he can maximize the amount of money he makes on the appreciation of the property. We do it differently. We lock in your contract and we'll build a house. As long as we can build for a cost, and to be very transparent, we make between $15,000 and $20,000 per house. That's what we do. A
Okay.
normal builder makes $50,000, $60,000, $70,000 on a per house basis.
Wow.
Instead of us making all the money, I'd rather sell an investor two or three houses, make sure he's cash flowing, he's happy, because a happy investor will buy multiple property from us, and that's
Yeah.
usually what happens. So we make it on the volume, and we build it on the
Okay.
volume. So our philosophy is a little bit different. We share the equity, we share the love. We want investors to do well, because if you do well, you're going to come back. If I sell you a property that it's not going to cash flow, you never buy from me again. And as you well know, John, I mean, the compounding effect of good is powerful, but the compounding effect of the negative connotation of a brand is also extremely horrible. So we
Right.
rather be on the good side of the investors because we are investors. And
Mhm.
so we make a little bit less. We don't definitely make money.
Sure.
That's how we stay in business. But because we also own the property management company, the insurance company, we're fully integrated. I can make less on a house because I will make it on the several different verticals of the business, right? For
Gotcha.
example, my insurance is usually cheaper than anybody else. And
Okay.
usually you get a quote from a third party insurance company. My insurance is going to be cheaper because my commission rates are lower and I
Hmm.
try to make less money overall because my goal is to service the investor. My goal is
Hmm.
to bring this opportunity to people that are investors that are looking to invest and have passive income and financial freedom. Is really taking the money off of Wall Street and put it back into the power and the hands of the people. That's my passion. That's my dream. And that's why I'm so excited about this opportunity because people are still asking, is this a good time to buy, Wagner? I'm still buying it. I mean,
Yep.
don't buy it in New York City. Don't buy anything that in Florida that is above $600,000. Those properties are probably going to have a correction in price.
Yep.
But
Agreed.
entry level homes are entry level homes any time of the year. Any recession that you can face, it is still going to be great because you can only build it at a cost, right?
Yep.
So once that's your delta, that's where you're starting from. You'll do really well.
Yeah, no, it makes sense. So now you had mentioned before, Wagner, for 2022, and obviously this is 2022 to year to date, seen about a 22% increase in rents. I know I read recently that some very hot markets, I'll just mention like Tampa and Austin, Texas, they've been seeing 30 to 40% year over year increases, which I think long term is a little unsustainable. But where you're operating in Florida, do you have any projections or have you seen any data that shows, what 2023, 2024, et cetera, looking for rent increases? I mean, I don't expect 22% a year into perpetuity, but what are your thoughts on that?
I think rent increases are going to continue to happen
Okay.
in the excess of 20% a year at least. And the reason why
Okay.
is because there's no new homes. We have a
Okay.
deficit between 2009 and 2019. During that decade, we built almost 3/4 less single family homes nationwide than what we built in
Mm,
the previous decades. So
okay.
there's a shortage of inventory. The opposite in 2008. Also, John, you got to remember this: people that don't have a credit, they don't have the money, they don't have
Hmm.
the means to finance a house, they're going to have to rent. And that's what we have seen. I just mentioned to you that I collected 100% of 1 year's worth of rent from a lady and her husband.
Wow.
They're hardworking people, but they sold their house and now they have all this equity and they decided to prepay a year full of rent. And she mentioned to me, because I went there personally for delivery, I really regret selling my house because now I can't afford to buy a new one.
Yeah.
And that's what happens. People are getting out of their houses because now you have this huge appreciation, but they
Hmm.
can't afford to buy a new property.
Yeah.
So the tenant pool are really increasing tremendously. If you notice, the largest raise for real estate in the history in the US market. Blackstone just raised $24 billion to continue to buy single family homes. So
Wow.
because I deal with investors on a daily basis, they keep asking me, "Hey, Wagner, what do you think?" I'm like, "Look, don't ask me. Ask Blackstone. If they raise $24 billion, they know much more than what I do." But it's really about the jobs, right? I mean, follow the U-Haul trucks. Real estate is
Hmm.
simple. Where are the jobs going to? Where are people moving to?
Yeah.
It's just math. But when you talk about over appreciation in rents, like Tampa and Austin, well, Apple is going there, Tesla is going there,
Hmm.
Amazon is going there. Those companies don't aim to lose, to miss the target,
Hmm.
right? And it's just like you're saying, well, what happened to New York City 20 years ago? You can buy an apartment in the city for 50 grand. Now
Yep.
it's $1.5 million minimum, right?
Yep.
Same thing in San Francisco. So some metropolis, some Miami, for example, what it was 10 years ago and what it is today, it's truly unaffordable for a lot of people. So some cities, John, there's no turning back. Those are going to be major cities. Those are going to be major markets. And I think the appreciation in rent as well as in real estate are going to continue to happen as long as you are in the right segment of
Yep.
real estate. And that's, for me, entry level homes.
Yep.
People need shelter, which is an entry level house. People need food. People need healthcare.
Hmm.
When you assess the basics of population and human needs, you're fine. There's no
Yeah.
crisis.
Yeah, exactly. Someone might hold out on buying the new iPhone 14, but they can't exactly hold off on, getting shelter and live under a bridge or something. So
You're absolutely correct, right? You will place your family with comfort and safety. So you will
Mhm.
appreciate that. You may not be able to pay for your health insurance, but you will
Yeah.
pay for your food and your shelters. So when you have entry level properties, you're pretty much sheltered from anything else.
Sure. Sounds good. Well, as we're wrapping this up here, Wagner, and again, thank you for coming on my podcast and educating my listeners and letting us know about the Florida market. Now, we've been just talking about single family homes. Obviously, I myself am a fan of duplexes, triplexes, and fourplexes. mainly for the fact that you can actually stretch out your Freddie Fannie Mae loans in whatever reason, or for whatever reason, Freddie Fannie, subsidized mortgages, they consider single family homes anything from 1 to 4 units. With that said, is your company still just focusing only on single family housing, or are there duplexes, triplexes, fourplexes available or in the process of being built?
So we have some duplexes being built right
Okay.
now, but we have received an interest from a lot of family offices who just sold 256 units for one group for $75 million. So
Oh, is
we
that
have
all?
seen a lot of, syndicators. We have seen syndicators put a lot of money together, doctors, dentists, and really purchasing multiple units. So I don't think you're going to have a lot of duplexes, quads available in the market now, just because the land is so expensive and the restrictions on building and
Okay.
constructions are so tough. So you're going to see a lot more single family townhome projects. We're doing a lot of townhouses right now. Great value, great rental appreciation on that as well, especially if you decide to do it on locations that are actually booming. We have a
Okay.
project right now in Davenport, which is right 2 minutes from I-4, Target, Best Buy, Chick-fil-A, Hobby
Oh,
Lobby. So if you pick your locations correctly, you can probably get away with townhomes being a great asset as well. But yes, for the investors that are not, doing a lot of multifamily yet, and you're looking for the fourplex, you're probably going to have a hard time finding in the state of Florida, at least new. So
sure.
yeah, those not a lot of them are coming into the market, John. I'm still.
Yeah. No, that's fine. It's kind of funny. I want to say it was mid 2018. There was actually another provider I had networked with. There was a new build, one level fourplex, $400,000 or $100,000 a unit. And I went back and forth. I'm like, technically I could afford this. Technically I could get $100,000 for the down payment. There goes all our reserves, all our savings, all our liquidity. I don't feel comfortable doing this. Well, geez, now the other day of course, I had to look, and it's like, yeah, worth 750, $800,000 now. 4 years later, but I don't know, live and learn.
Well, you can't win every single one of them. And people keep asking me, Wagner, when was the best time to plant a tree? Well, that was 20 years ago. But
Exactly.
today is still a great day. You know why? Because 20 years from now, you're going to look back, and if you haven't done it, you're not going to own any real estate.
Exactly.
The cash flow that you won't never make is the one for the property that you don't own. I tell people all the time. I was in a meeting. This was really funny because this gentleman, we participated in an inner circle event, and he came in and he was asking a whole bunch of questions. Oh, I heard you on the Real Estate Guys podcast, and Keep Line Hold, Get Rich Education, and
Hmm.
I read Tom Wheelwright's book and Robert Kiyosaki books and Ken McElroy's books, and man, what should I do next? I'm like, sign a contract,
Yep.
sign a purchase contract, buy something, right?
Yeah.
Education is key. You got to educate yourself. You got to have the knowledge. But if you don't apply it, it's not going to be worth anything, right? So at the end of the day, is this making it very simple. Your three first purchases are going to be the toughest ones.
Yep.
You'll feel, am I making the right decision? Is this really going to cash flow? Is this the right area?
Hmm.
Trust your gut feeling. Trust your gut feeling. Do your due diligence. Check the numbers. Check the comps. But go ahead and take action. Because if you don't do it, you'll never get out of your comfort zone. And guess what? You're going to still have a W-2 job for the rest of your life. And maybe not as
Exactly. Yep. No, that makes sense. So, well, I appreciate all the information you gave us, Wagner, and I myself looking forward to investing in build to rent. I'm looking at doing a massive portfolio refinance of my own next year, hoping to redeploy about $150,000 towards new properties. Anything else that I maybe should have asked you and didn't think about? And if anyone is interested in, purchasing a investment property themselves, or maybe even a retirement account, what's the best way to reach out to you?
Yes, you can go to our website, www.b2rdirect.com, or my personal website, which is wagnernolasco.com. Send us a text, send us an instant message. We'll reply to you as quickly as possible. We have our whole team here. But the biggest advice I have for everybody is this: do your due diligence. Don't be
Hmm.
afraid. If you follow the inflation rates and what's happening into the market right now and what's happening to your fiat dollars that is sitting at the bank right
Yep.
now, you're just losing a ton of money by having that money parked there, sitting there. So invest in real assets, assets that are real, that can really pay back your principal plus a good amount of your future returns. Because at the end of the day, John, I'm trying to actually speaking to my family. My wife is a physician, but I told her, says, let's try to do something special every first of the month, because that's the happiest day for me, because that's when I collect all my rents.
Oh yeah.
So the first of the month could be a Monday, could be a Thursday. So we were in a cruise actually on September 1st this year. We took a 7-day cruise with my family, and
cool.
I purchased one. Yeah, I purchased one property for each one of my daughters right now, so they can learn how to invest. The oldest one is 12, 9, and 3.
Okay.
And they're actually, I'm helping them manage their properties, but, they have to look at the financial statement on a monthly basis. If they collect the rent, what was the cost for insurance, mortgage, property taxes, how much cash flow do they have? And this is the financial education I'm doing at home, which is really important. So if you think that you're doing well and you can't afford to invest for your kids, for example, the 3-year-old, we purchased a property for her so she could actually pay for college. And by the time that she actually goes to college, this property is probably going to be fully paid off. And with the positive cash flow for the rent, she's going to have a good nest here for college. Yeah. So think about your family, invest wisely. And my advice is, entry-level properties in the Sun Belt states. If you don't like Florida, don't invest in Florida. Go to the areas that you like, Tennessee, Arizona, Texas, whatever. Don't buy from us unless you feel 100% comfortable. But invest in an area that you feel comfortable, because what you're doing today is, and I had a teenager come to me. He recognized me actually. His father did at the cruise, and it was really funny because he says, "Hey, I'm Wagner Alaska from B2R Direct," and I started laughing, and I had my shirt on, and he started laughing. And the father asked me, "What is the advice you have for my son? He's 17, he's getting started, he's very motivated." I'm like, "Look, you have two options in life. If you play now, you're gonna pay later. Either you pay now and play later, or you play now and pay later." What do I mean by that? You're 17 years old, just getting started, working your credit, saving money so you can put down on a house, right? If you buy the expensive car right now, if you live the life, if you start going to nightclubs and spending all your money, you're never going to make something sustainable for your future. So start as early as possible is my advice to him. And his father was impressed. I'm like, "Look, because if you play now, you're going to pay later.
Yep.
Or either you can pay now and play later, right? If your dream is to own a car, you will own 10 cars. Just give time for your properties to mature so you can actually make the property buy and pay for your car." And the father was very thankful to me, because at the end of the day, that's what I'm doing for my daughters. We're paying now to play later. And real estate is the best investment in the world. It has made more millionaires and billionaires than any other asset class globally. So, that's it, John. I wish I add value to your listeners, to the investors listening to us. John is a good friend of mine. I mean, we've been into events together. We've been to Belize together.
Yep, great place.
At the end of the day, this is a business that you do with people that you like and you trust. So real estate is a family business. You're going to meet a lot of great people on the journey. Stay focused. Choose your partners wisely. And John, thank you so much for sharing so much knowledge with us. And I listened to your podcast, and congratulations, great success.
Yeah, thanks again, Wagner. And I definitely like that quote, pay now, play later, or play now, pay later. I think we can all take that to heart. So thanks again, Wagner. It's been great having you on, and wish you all the success in 2023.
Thank you, my friend. I really appreciate it.
Thank you for listening. Be sure to share, rate, review, and subscribe on your favorite podcast platform. For more updates, check out www.wealthandfreedomnexus.com. Remember, nothing on this show should be considered tax, legal, investment, or professional advice. This show is produced solely for educational and informational purposes. Please consult an appropriate and licensed tax, legal, real estate, or business professional for specific advice for your situation. For distribution or publication rights or media interviews, please contact the host.